Be Wealthy and Smart, episode 1628.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about, will interest rates drop? Because, of course, we have volatility with the tariffs right now, but I think that's short-term noise that will work itself out. The bigger story is what's going to happen with interest rates, because recently the Fed published their minutes regarding their projections about interest rates. We also have inflation still stronger than expected, but potentially a much weaker job market underway. So we're getting mixed signals, and what does that mean for interest rates and a potential refinance of your mortgage perhaps? Well, recently mortgage interest rates dropped to the lowest level in a month, prompting more current borrowers to seek savings in a refinance. While lower rates didn't give potential buyers much incentive, the run on refinances was enough to push total mortgage demand 2.8% higher compared with the previous week, according to the Mortgage Bankers Association's seasonally adjusted index. The average rate for a 30-year fixed-rate mortgage with conforming loan balances of $832,750 or less decreased to 6.17% from 6.21%, with points remaining unchanged at 0.56, including the origination fee for loans with a 20% down payment. Joel Kahn, Vice President and Deputy Chief Economist at the MBA, said Treasury yields ended the week lower as weaker data on retail sales and home sales outweighed better than expected readings on the job market for January. And that's true. We did temporarily have a bump in jobs, but the longer-term trend, because of AI, is expected to be lower. So looking at the Fed minutes, Federal Reserve Governor Christopher Waller made a lot of comments and said the February jobs report and not the Supreme Court ruling overturning a large part of the president's tariffs on imported goods will be the key to whether the Federal Reserve needs to cut interest rates in March. He said traditional central bank wisdom suggests that we should look through tariffs. I did this when they went up and will do so if they come down. Waller said he is more focused on the labor market. Waller has been pressing the Fed to continue cutting rates, saying he was worried the labor market was weakening. Waller dissented from the Fed's decision to pause at its January meeting after 3 straight rate cuts. He said he was surprised when the labor market reported 172,000 private sector jobs were created in the first month of the year. He's had some concerns the strong January jobs report could turn out to be more noise than signal. But he added he couldn't dismiss the possibility that the labor market data has pivoted to more solid footing. If so, it may be appropriate to pause interest rate cuts, he said. Waller said the two possibilities, whether the February jobs is strong or weak, is now a coin flip, and the data will be released on March 6th. So there you have it. According to the Fed, all eyes are on the jobs report, and that's going to be the key indicator whether interest rates will decline or not. Unless some unforeseen circumstance happens, which of course is always possible. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.